Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate filings so you don't have to. Today we are going to be diving into an 8K filing from Duos Technologies Group, and let me tell you, it's not about some fancy new invention, more like a company going back to the bank again. In short, Duos Technologies just announced they're selling more stock. Not exactly thrilling news, but it does give us a peek into their current financial situation and future plans. Let's decode what this all means. Okay, so on April 14, 2025, Duos Technologies made a deal with Accession Capital Markets. This deal changes a previous agreement from May 17, 2024. Basically, Duos is allowed to sell shares of their stock over time through what's called an at-the-market offering. This means they can sell shares bit by bit depending on the market price instead of all at once. Think of it like slowly emptying your piggy bank instead of cashing it all in at once. Now, under this new agreement, Duos can sell even more stock. Specifically, they're increasing the amount of stock they can sell by $8,850,000. That's a significant chunk of change. This means they are diluting the stock, meaning there are more shares and each existing share is now worth slightly less. The company plans to do all this under a registration statement they already filed with the SEC back in June of 2023. This shelf registration allows them to offer and sell securities without having to file a new registration for each offering, which saves time and money. So what's the catch? Well, Accession Capital Markets, the sales agent, will try to sell these shares in a way that makes sense for the market and follows all the rules. Duos gets to decide how many shares to sell, when to sell them, and at what minimum price. It's like setting the rules for your own stock sale. Either Duos or Accession can stop the sales if they want to, giving them some flexibility. To make it all legal, they included an opinion from a law firm, Schatz & Bowen, saying that these shares are indeed valid and can be sold. It's like getting a thumbs up from the legal department before you go ahead with the sale. Now, let's step back and look at the bigger picture. Why is Duos Technologies selling more stock? Companies usually do this when they need more cash. Maybe they want to invest in new projects, pay off debt, or simply keep the lights on. Without seeing the full financial statements, it's hard to know the exact reason, but selling stock usually means the company needs money. For investors, this can be a mixed bag. On one hand, the company gets more money to grow. On the other hand, because there are more shares, each share represents a smaller piece of the company, which can lower the stock price. It's like slicing a pie into more pieces. Each piece gets smaller. In this case, Duos Technologies is increasing the number of shares they can sell by a significant amount, $8,850,000 worth. This means the existing shareholders will own a smaller percentage of the company. This is also an interesting move because at-the-market offerings, or ATMs, are most of the time used to slowly sell stock without causing big market movements. This suggests Duos needs to gradually raise capital without signaling a major distress to the market. It's a careful balancing act. Looking at this filing, it seems Duos Technologies is in a position where they need to raise more capital. While the company has the legal framework to offer these shares, the decision to do so raises questions about their financial health and the need for this funding. Are they expanding rapidly? Are they struggling to maintain operations? It's worth investigating further. Thanks for tuning in. If you enjoyed, please subscribe, like, and comment.